Mr. Sitaraman, the CFO of VA WABAG, is with us on the show right now. Thank you so much, sir, for speaking with us this morning. Just tell us what has worked for you this quarter, and especially with the improvement in margins. What have been the drivers there?
Yeah. Good morning, Tamanna. Good morning to all your viewers. Thank you for having us on your show. I think it's been another strong show from our side. We continued our path of profitable growth where our PAT grows at a rate much faster than the top line. And that clearly indicates what you mentioned, the growth in margins, control over the fixed costs, as well as generating money from the surplus money that we have. So we have performed on all three counts. One, on the contribution, the international mix, the industrial mix has helped the large complex jobs that we are doing today, whether in Chennai or in Saudi Arabia or in Africa, multilaterally backed, sovereign funded or LC backed, are all helping in both quality of receivables and also the quality of margins. Number two, we have kept our fixed costs under check, and that has helped in improving the EBITDAs consistently. We are a modular company, so we could do more with less. We don't have to necessarily add more to do more. And that's one advantage that we bring to the table. And third, of course, the way we have managed cash and debt has helped in, and if you see for the year, for the first 9 months, our interest income is far above the interest expense that we have reported. So it's all in all a good show. Of course, with all of the profitability, also our balance sheet has strengthened. Working capital has moved to close to 100 days now. And we closed with a net cash position of over 1,000 crores. This is a historic high for us. 1,000 crores gives us a lot of flexibility in terms of making decisions, choosing projects, investing more in PPP, one of the things that we are focusing on, and of course, getting into new markets for expanded business.
Oh, fair enough. I'm just trying to understand what is the kind of unbilled revenue mix that you are seeing right now? Because of course, the nature of your business is these long time cycles. A lot of that business is coming from municipal corporations. What is that mix at this point?
See, our unbilled usually is a factor of the phase of the project. Sure. It stays anywhere between, say, about anywhere between 20 to 25% of our overall revenues, which means once in 3 months is the cycle. But when we say unbilled receivables, it is primarily generated from the progress costs. So you incur costs when you book a liability, whereas the progress receivables come from the progress of the vendor. So it is not necessarily a financial liability. So this doesn't hurt our working capital, but of course, the accounting standards requires us to keep recognizing revenue. So that's broadly been the range. And one of the indicators that we are managing this part of the business well is the fact that we are continually increasing our cash and reducing our working capital days, which means we are actually converting profit into receivables and receivables into cash.
Raman, what about ordering activity? One is that the order book that you may have. Good morning, Neeraj here. Two is just the fact that the quantum of ordering that is happening in the water space seems to have come off a little bit as well. And then when I look at your numbers too, right? I mean, March 2023, you had a 925, 930 crore quarter. You are currently at the 925, 930, 950 crore quarter, right? In some sense, when does that, when do you kind of, in a recurring basis, break out of that 1,000 crore per quarter mark in terms of execution?
See, I think now it has to happen, Neeraj. I don't think we have a choice around it. With the 16,000 crore order book, if we don't deliver those kind of quarters consistently, then we will be under pressure from customers, which we don't like to be. We are not that kind of a company. So you will see growth, and you are seeing, and especially it's important to contextualize what happened during the first 4 years between 2020 and 2024, when we recast our business through our strategy. So more EP projects meant that the top line did not grow so much, but our margins significantly grew. We almost doubled our EBITDA, doubled our PAT, improved our cash threefold. So those are things that have to be appreciated for context. But now having done that, we said in 2024 that from now we'll grow at 15 to 20% consistently. And that we have demonstrated in the last year, as well as in the first 3 quarters of this year. And we are confident that this will continue to grow. And you can comfortably do your math. If you do a 15-20% year over year, you will see more 1,000 crore quarters as we move forward. And hopefully that's also our endeavor. But this is more a consequence for us. We will continue to focus on delivering profitable quarters as well as cash positive quarters.
You reckon FY27 or FY26 could be overall a 15% growth year at the very least possible?
See, the first 3 quarters have already been 18%. There is no reason to believe that.
No, I'm now asking FY27 or FY26. You reckon you can continue doing that? Because that's what breaks you out of that 1,000 crore per quarter mark consistently, right?
That's exactly our medium-term outlook, where we said 15 to 20% over the next 3 to 5 years.
Okay.
So the outlook is over a 4 to 5 years, we want to double our business. And we are seeing good traction over there, whether it is ordering, whether it is the international business. All these are helping us continue to build that confidence on, Neeraj.
Okay, we'll leave it at that. Mr. Sitaman, thank you so much for taking the time out and being with us, and all the best for the quarters ahead.
Thank you. Thanks a lot.